In this video, we will review bank reconciliations. These are very important for a business because they help to find errors and omissions in the books. For example, if you fail to record a transaction involving cash or write it down for an incorrect amount, most likely the only way you're going to find it is through the bank reconciliation process. Bank reconciliations are not that difficult if you just remember a few steps. There are two sections to the bank reconciliation: the section where you adjust the bank balance and the section where you adjust the book balance. There are only two adjustments to the bank balance. There's one addition and one deduction. If you can remember these two, then you know all other adjustments are to the books. The first and only addition to the bank balance is for deposits in transit. Deposits in transit are items that we have deposited, that we have written down on our books, that have not made it to the bank yet, so they will not appear on the bank statement. The only deduction to the bank balance is for outstanding checks. These are checks that we have written and they appear on our books, but they do not show up on the bank statement. They're still outstanding for the bank. So when you take your ending bank balance and add back deposits in transit and deduct your outstanding checks, you get the adjusted bank balance. The book balance is adjusted for items that we really weren't aware of until we got our bank statement. For example, if we've earned any interest on our account, we would add it back here and we would find it on the bank statement. If the bank has made any collections for us that we were not aware of, it will show up on the bank statement and we add it here. We may have some errors that we've recorded on our books. Errors may be either added or deducted. You'll just have to reason those out and figure out which place they go. As for deductions, we have NSF checks that we have received from our customers. These are checks that were not any good, that the bank has deducted after we have deposited them. So we have to deduct these from our books. Bank charges, also we find those on our bank statement and we need to record those on our books, so they're deducted. And of course, any errors that are not in our favor need to be deducted from our books. So once we have our ending book balance and add back our additions and subtract our deductions, we will get our adjusted book balance. So when we're done, the adjusted bank balance has to equal the adjusted book balance. So now let's start to work on exercise 6-9, where we can put some of these steps in practice. The first thing you need to do is enter the heading for your bank reconciliation. It's just the name of the company, the bank reconciliation, and then the ending date on the bank statement. First thing you always want to do is enter your ending balances. So if we look at our text, it tells us that David has a bank balance of $24.50. So we'll enter that on our reconciliation. You want to come down next and put in your book balance. And according to the text, the checkbook indicates a balance of $22.82. So now it's time to see what adjustments we have. On A, $60 deposit made on August 31st was not on the bank statement. So we probably made this deposit too late for it to appear on the bank statement for the next day. So we have it on our books, so we need to adjust the bank balance for this deposit. So this is called a deposit in transit. And remember that this is the only type of addition to the bank statement balance. And that was for $60. So when we take our ending bank balance and add back the $60 deposit in transit, we have a balance of $25.10. Okay, on B it says checks 76 for $25 and 79 for $78 were outstanding. So the next thing I want to do is deduct outstanding checks. And we had two. The first one was number 76 and it was for $25. And the second one was number 79 and it was for $78. So that's a total of 103. So when we take our balance here and deduct the outstanding checks, we'll get an adjusted bank balance of $24.07. Okay, so we've only added deposits in transit and subtracted outstanding checks. Okay, for the checkbook, on C it says the bank collected $140 from a customer of David's and entered it directly into his account. Okay, so that is an addition to our checkbook. The next adjustment said the bank charged $15 for service and deducted it from David's account. Okay, so we will deduct the service charge, and it was for $15. So when we add our collection from our customer, we get $24.22, and then when we deduct the $15, we get $24.07, and that is our adjusted book balance. Okay, so notice that the adjusted bank balance and the adjusted book balance are now equal. So we know we've completed our bank reconciliation.